60 to this high is somewhat harder.
See an hourly candle close completely bullish with absolutely no wick above, it gives us a very strong indication that the buyers are fully controlling this market right now. There is no resistance from sellers. And after a strength candle like this prints, you can assume there will generally be continued upside or downside, depending on if the candle was bullish or bearish. Now, there will be pullbacks, and of course, context matters, which we'll get into soon, but ultimately it shows control, leading to further moves in that direction in most cases. When we see these strength candles, we know two things. Number one, we want to move with the strength. Number two, we want to make sure that we don't trade against it. Very simple for getting good trades and avoiding bad ones. Now, when we're looking at strength candles, as with all candles, the size of the candle body matters too, okay? We have 4 examples here. All are showing uninterrupted buying, but the largest candle is by far going to be the strongest and the best indication that the buyers are in control. A very small candle body, even if there is no upper wick, doesn't show a massive amount of buying. Yes, it shows that there pretty much isn't any selling acting as resistance, but it's not showing a massive influx of buying in the same way that a very large candle is. So a candle body that is super small, like that weakest example there, it's not going to be the strongest for determining future trend directions, even though it does show some uninterrupted buying. The big candle, however, that's the kind of thing we want to see for high accuracy moves. This is because large candles show massive buying and smaller candles show a less aggressive wave of buying. The buyers are still in control at this point, but not in
So guys, welcome back to my channel. So today I'm actually going to be
Welcome back to my channel.
dropping
Today
a full step guide on how
welcome back to my channel. Dropping today
a full step
guide on how welcome back to my channel.
so I'm going to be dropping a full guide on how you can trade the CRT candles on Boomer Crash. So if you are here to watch the video, please do where to it to watch the video to the end. So I've talked about how you can use the CRT. I've uploaded videos, tons of videos on it. Please drop in the comment section where you are watching from, your location and the time in your location. So currently now this is 8 a.m. Nigerian time, and this is actually 3 a.m. CRT candle, and which is also our London section CRT candles. So drop in the comment section where you are watching from and the time in your zone, your location you are watching from. So to trade the CRT candle, the first thing you need to understand is that you need your higher time frame you need your higher time frame bias, your draw on liquidity. It is very, very important. It is very, very important. And all these things, I've talked about it on my what, on my videos that I've posted on the video. If you still need me to what, to talk about it on this live stream, because it is very, very important. One of the things people, one of the major problem people have in what, in in trading CRT is the what, is understanding their what, their lives, understanding their higher time frame bias. And that is one of the things they fail to understand, and which is causing the failure of what, of their CRT candles. So if you want me to talk about the CRT, the how you can determine your what, your draw on liquidity, then drop it in this in the comment section. I'm going to be talking about it. So this is Crash 500 on 15-minute time frame. I have done my analysis from the what, from my higher time frame bias, and I've picked my what, my directional bias. You can see that I've entered already, and I've set my what, my take profits, and my what, everything is what, everything is intact. Right, everything is what, everything is intact on it. So the the what, the bias is what, is bearish for today. And don't forget that we are just starting a new day. We are just starting a new day, a new week in synthetic indices. So these are the things that we put into consideration, on what we put into consideration while we are talking about our what, our CRT candles. So now this is Sunday, right? This is Sunday, and this is a new day, right? Is a new day that we are starting, is a new day and a new week also. So everything is what, everything you want to be doing today, you need to be very, very careful. You need to be very, very careful, and what, and make sure, that what, and make sure you are careful about it. You are careful about your bias, because it's very, very important. So you need to determine your what, your bias. You need to determine your bias, which is very, very important, right? Is very, very important. So the bias has been determined already. I've determined the bias already, and I've known where I'm going to. So I've know where I'm going through. So I've know where I'm going through, right? So I've know where I'm going through. So I've determined my bias already. So I know where I'm going through. I know where I'm going through. So with the bias I've determined already, I've done what is need to be done, what needed to be done with me. So I already know the bias that I'm on currently. So you know that in trading your CRT candles, there is a lot of things you put into consideration. I've talked about it earlier. Your bias, your draw on liquidity. It is very, very important you put these things into consideration. It is very, very important. You can't trade CRT successfully without considering your draw on liquidity, and that is the number one thing. After your draw on liquidity comes your what, your higher time frame key levels. A CRT without a key level, it is nonsense. It is what, it is nonsense. I mean, to use that word nonsense, because without, you can't have a CRT. If you have a CRT and if you have a CRT candle and your higher time frame key level is not there, then automatically that CRT will not what, will not be profitable. And that is one of the reasons why you come and say, Modupetemi, and this thing is not working, CRT is not working. It will not work because you didn't put in the consideration of what you need to put into consideration, right? You don't put into consideration what you actually need to put into consideration. That's what I'm telling you on this live stream now, that for you to be what, to have a profitable CRT candle, then you must consider your what, your draw on liquidity. After your draw on liquidity, your higher time frame key levels is very, very what, is very, very important. Please help me to like this live stream. If you are just watching, drop in the comment section where you are working from, your location and the time in your what, in your location. I'm going to be telling you the appropriate CRT candle that is available for you to trade. Because another challenge people has in what, in CRT is that another challenge they have in CRT is the time conversion, the differences in time. So these are the challenges that people have in what, in their CRT candles. So I'm going to be tackling everything you need to know about CRT on this live stream. So enjoy to what? Enjoy to stay to the end and watch to the end. And if you have any question along the line, please do where to what, to drop it in the comment section. I'm going to what? I'm going to respond to it. Like I'm going to respond. So I've talked about that. Okay. So I've talked about it that the so I've talked about it that you what you need to know now is your what, is your CRT, right? Is your CRT. So is your CRT candle, is your CRT candle, and that's what you need to know about it. So another thing is that once you in when we talk about higher time frame key levels, there are other things. Higher time frame key level can vary from what? From the higher time frame key level can vary right from your the higher time frame key level can vary right from your so your higher time frame key level can vary. So when we talk about higher time frame key levels, then we'll be talking about like this network is poor. So higher time ranking level can vary from your order block, your fair value gap, your inverse fair value gap, your the higher time frame key level can vary from your order block, your inverse fair value gap, your inverse fair value gap. So your higher time frame level can vary from your what? From your inverse fair value gap.
CRT candle,
Your I,
and that's what you need to know about it.
so your I.
Another thing is that when we talk about higher time frame key levels, there are other things. Higher time frame key level can vary.
So your higher time frame key level can vary from your what? From your fair value gap. So your higher time frame key level can vary from your order block, your old high, old swing high, old low, your inversion fair value gap. So these are the things that made up your what? Your higher time frame key levels. They made up your what? Your higher time frame key levels. Right? They made up your what? Your higher time frame key levels. And once you put this thing into consideration, automatically you will have an effective CRT. Right? You have an effective CRT. So you have an effective CRT candle. You have an effective CRT candle that you can use to trade the CRT candle. So and determine your CRT candle. So those are the things you put into consideration. So those are the things you put in. So those are the things you put into consideration. So those are the things you put into consideration. Your CRT candle, it is very, very important. So when we talk about higher time frame key levels, it is very, very important. I keep hammering on it that higher time frame key levels is very, very important for you to have a profitable CRT. You trade a CRT that will be profitable and effective for you, then you must you must consider your higher time frame key levels. It is very, very important. It is very, very important, and those are the things that you must put into consideration. So when we talk about draw on liquidity, these are the things that we'll keep into consideration. So these are the things that
Good evening, everyone. So to frame your anticipatory skill, your projection, what are you expecting from the market? Can everybody hear me clearly?
Yes. Okay.
So what are you expecting from the market? What is your direction? What are you thinking the market will do? So this is the elementary things. As a matter of class, this class is very, very, very important because it forms a fundamental in your projection, in making your bias. Now, as you have it on the slide now, basically, the market do two things. You should expect three things from your projection. Let me put it that way. Now, take this as a daily chart, right? As a day trader, we'll be working with daily time frame, or as a trader. Now, if you want to extend it to scalper, the time frame will change. But for the purpose of this class, let's assume we are on the daily chart. Now, on the daily chart, now when you look at this candle, now you can see that I have two candles. This is my previous day candle. Let's assume now today is Tuesday, right? So let's assume this is Monday candlestick on the daily chart. You mark out the high and the low, right? Now, from the high and the low, you are expecting three things. Is it that it's now once you know the high of that range and the low of that range, automatically become your daily range. Hope you remember our daily range, right? So it becomes your daily range. Now you expect three things to happen. Is it that the candle, the current day that you have, will be in the range of yesterday? In that kind of case, in that kind of scenario, we say we are in a consolidating market. Now, in the sense that it will neither take out the high, nor will it take out the low. It's not taking out the high of the previous candle, and it's not taking out the low of the previous candle. In such a scenario, you are in a consolidating market. Now, that is one scenario. Another scenario is that it takes out the one of the candle, right? It takes out.
So I'm running an extensive class for you now on how you can determine your draw on liquidity, your higher time frame draw on liquidity. So these are the basic prerequisite things that I taught in my class, and I'm giving you the video now. I'm giving you the content now so that you can put it down on your notes, drop it in the comment section, anything you don't understand, and I'm going to talk about it. So these are the prerequisite things you need to know about your draw on liquidity. I keep hammering, your first thing you must consider in trading CRT is your draw on liquidity, and that is why I'm hammering it down. And these are the things you must know when trading your what? Your CRT, your draw liquidity, and let's go on with it.
It takes out one of the what? One of the sides. Now, in this kind of situation now, takes out the what? The what? The eye, right? Look at it. It takes out the what? The previous day eye. Now, in this case now, now one thing this will tell you is that it's going to frame your bias. Are you looking to a bullish day, or you are looking to what? To a bearish day? Now, if you are in a bullish market, you expect the current day candle to close above the what? The high of the previous day candle. Is that taking? And if you are in a bearish day, you expect the what? The current day candle to close below the what? The previous day candle low. Is that taking? So in that kind of cases, we're in the what? We are in a trending market. Then another scenario that we can have is when it takes out the what? The two side. It takes out the what? The buy side liquidity, and it also takes down the what? The sell side liquidity, and it also takes down the what? The buy side liquidity.
Buy side liquidity.
Now, definitely they will leave an imbalance at this area, right? Or you have an order block at this area. Right? So once you're able to establish that, that is based on your what? On your daily candle. Now you can, we've talked about previous day high. Now you can draw your conclusion using your what? Your previous day high, right? You can draw it from what? From previous day high. This is the high of the what? Of the previous. This is the high of the what? Of the previous week, and this is the what? The low of the previous week. Now, the moment the following week starts for synthetic
on your daily time frame, right?
It can be on your weekly time frame, and it can be on what? Your 4 hours time frame. You understand? If it's your 4 hours time frame, just from one crossbar to one crossbar, one period separator to another period separator will give you a weekly range of 4 hours time frame, and you can go to your weekly time frame and mark out the previous candle high and the previous candle. So that would be your what? Your daily range. Is that taking? Is that taking? Are we on the same page? Now now this is Friday, end of the watch. The Sunday now is what? This is Sunday candle. This beginning of a new week in synthetic. Is that taking? Now, on Tuesday, they make the high of the week. This is the bearish week. Now, on Thursday, they gave us the what? The low of that week. Now, looking at this now from the previous day candle now, let's go. This is the high, right? And this is the what? The low. Now, on Friday now, what do we expect? Since we are in a bearish market, we are expecting them to close above the what? The high, the low of the previous day candle. Yes or no?
Yes.
What happened? They did not. They gave us a consolidated. We are still bearish. You understand? Until one of them is taken out. Either the high is taken out or the low is taken out. So on Saturday now, what do we have? They took out the what? The low, right? So automatically you have two daily range now. You have internal and external. Let me put it that way. This is your external daily range, right? And this is your what? Your internal daily range. I hope I have not made any confusion with that.
No.
So now on Saturday now, you are expecting two things. Your draw liquidity, the moment you open the Saturday open like this, your draw liquidity are 2, which is the previous day low for Friday and the previous day low for what? For Thursday. One of them must be taken out, or the two of them, depending on the volatility you have in the market in that day, right? So, right, you're anticipating for that. But now, at the end of close, we could not have a candle close above it. So with this now, you can use this setup to frame a reversal. That is where I'm going to now. So a candle close, if the current candle you have, right, closes closes above the what? The previous candle range, you are, even whether it is a bullish market, if it is a bullish market, you are expecting a bullish, you are expecting the next candle to close above it. That is convincing. Let me take example here now, right? Don't forget our swing points, right? Don't forget all right. So if a candle close, let's say we have a candle like this now, they close. You don't have another candle like this. All right, you have another candle like this. Don't mind my drawing, might not really make sense. But what I want to establish is that this is the what? This is the close, right? Yes. Okay. The candle I'm drawing is nonsense. Let me draw it properly. Now this is the close, so you have the what? The open. You have a wick like this, and then you have a candle close, right? Now this is the high. What do you see here? This current candle now closes above the range of the previous candle. Automatically, what I'm expecting in the market, the next candle now, it can be your daily time frame, it can be your 1 hour time frame, it can be your 4 hours candle, it can be any candle. Just apply, you can apply this concept on any time frame. Now the next candle now, what do you have? The open, the close is higher than this, so it closes above this what? The previous candle high. So I can anticipate a what? A bullish, an uptrend. Now I'm expecting the market to what? To open here, right? Probably have a week, and then we'll go what? We'll go upside, right? Why? Because we are in a what? In an uptrend. In an uptrend, price will always take out the high. Is that taking? That's what defines a bullish trend, right? But the moment this candle now, right? This candle now, this current candle now, right? You know, this is what we have, right? We have the week. Now, the moment this candle now, what did I have? They opened higher. They did not close above this candle. Automatically, what is happening here now? I can say that my swing high is about to form. Yes or no? Yes. Now, but with this candle that closes inside the range of this previous candle, two things. I'm expecting two things. I'm expecting the next candle to be a what? To be automatically now. This will be a bearish candle. Yes or no? Because it closes below, open above, and closes below. This is going to be a bearish candle. No doubt about it. Yes or no? Yes. Yes. Right. Now, I'm everybody close. Just week close, have it? Everybody close. Just week close, have it? Everybody with me. I can hear you. So it means it's a week. I mean, a week. If it's not a body close below. If it's not a body close below, you can't expect the continuation of the downtrend. You can't expect the next candle to close, to take out, to be a bearish candle. It has to be an up candle or a consolidation. Is that taking? Is everybody with me? Now, right? Week down. Yes. And come and what? And come and close here. You understand? And come and what? And come and close here. You understand? Okay. Is it possible? Okay. It's not possible. So it means that it's coming down first and come and close up. Close above. Is that taking now? So that was what was a bullish candle. It's a bullish candle. That's what I'm establishing. It's a bullish candle. Yes. Now look at this candle. Now this is the word. So if you say it's not a bullish candle, now look at this on this Saturday now. This is the open. If it was a bearish candle now, this current Saturday now the open should have been here. How about justify that now?
Yes, you understand this now.
You understand it now. So from your open close, you can tell whether it's a bullish candle or a bearish candle. Mr. Grace, don't save any longer. right? This low is not safe any longer, right? Because they have to give me what? A swing high. So I know that this low.
So, uh, if you are just joining this live stream, so I've talked about how talk about how talk about how talk about so in your higher determine your higher time frame bias and determine your higher time determine your higher time frame bias and determine your frame bias and determine your higher time frame bias. The first thing you need to put into consideration is determine your higher time frame bias. The first thing you need determine your higher time frame bias. The first thing you need to put into consideration is so in determining your what your higher time frame bias, the first thing you need to put into consideration is your to put into consideration is your what your higher time frame key levels, right? Your higher time frame key levels. So your higher time frame key levels is very, very important while you are trading your CRT, and that is one of the things that has been lagging or you've been missing out on your on your CRT trading, and that is why you have not been been successful about it. So for you to determine your higher time frame bias, you must consider your your higher time frame key levels. And one of the things you put into consideration is your higher time frame key levels is very, very important. Your higher time frame key level is very, very important, and those are the things that so the efficiency of your higher time frame key level is very, very important. Your higher time frame key level is very, very important. So you must understand. So your higher time frame key level is very, very important in in determining your bias. So it's very, very important in determining your bias. So when we talk about higher time frame key levels, it is very, very important. It is very, very important. So drop in the comment section the key levels that you consider while picking your higher time frame bias. So I've talked about the order block, the fair value gap, the old high, old swing high, and old swing low. We talk about inversion fair value gap, we talk about breaker block, we talk about mitigation block. So these are they are the key levels that you look out for on your higher time frame. They are the key levels you look out for on your higher time frame. And if you can find 3 of these higher time frame, you can find 4, you can find higher time frame key levels, you can find 4 of the key levels, you can find 5 of it. So the more key levels you find at a particular area, the more confirmation the stronger your trade setup, your setup. So try as much as possible to always have at least 3 key level present in your trade before you pick an entry. Try and as much as possible to always have 3 key levels present in 3 key levels that is present. Automatically you will be profitable. Please like this live stream and also share with other people for them to benefit from it. And also drop in the comment section where you are watching for, and I'll be telling you the time, the current CRT candle that is forming in your location right now. So I've talked about the key levels, the higher time frame key levels. So once you are done with your higher time frame key levels, and now comes the day you are trading, your weekly profiles plays a lot. So once you are done with your weekly profile, then we'll now talk about the intraday profiles. So these are the things you put into consideration while you are selecting your your higher time frame, your CRT candles. While you are selecting your CRT candles, so you must consider all these things. You can't have an effective CRT candle without your higher time frame key level, without your higher time frame bias. So those are the two things. I keep repeating this to those are the two things that are you always find what in your analysis. Your entry cannot be correct. Your trade bias cannot be cannot be correct. So you must put this thing into consideration. It is very, very important, very important for them to be put into consideration. So your higher time frame key levels, your intraday profile, your weekly profile. So once you start from a higher time frame, now for the higher time frame, it can come from your daily time frame, it can come from time frame, and it can come from your 4 hours time frame, and can even come from your from your 1. The variance in this thing varies. The variance in this thing is because of the type of trader that you have. The type of trader that you have. So these are the variance that will have in the higher time frame that will have. So those are the variance that will have in the higher time frame that you have. So for the higher time frame, there's a lot of things you must put into considerations. A lot of things. So levels can be your it can be your order block, fair value gap, inversion fair value gap, old swing high, old swing old swing low. So those are the confirm power of 3. We are talking about the power of 3. So we are talking about the power of 3. So the power of 3 can vary. That's your weekly power of 3, your opening accumulation manipulation. So those are the power of 3. For you to be able to trade CRT candle is still also your power of 3. If you know, you know. If you don't know, you don't know. So when we talk about CRT, we are still talking about your power of 3. We are still talking about your power of 3. When we talk about CRT candles, we are still talking about your power of 3. So power of 3, your ability to your power of 3, your weekly power of 3, your weekly cycle with your with your daily cycle, your daily power of 3. If you are trading the daily CRT candle, if you are trading the 4-hour CRT candle, you must be able to understand your power of 3 on the first time frame. And these are the key small things that is lagging in your trading, and that is costing you a lot of things. It's costing you a lot of things. So you must understand your power of 3. As in, you must understand it. So once you understand it, you can be able to flame it. Now, this is 9:37 in my area, in my location in Nigeria. Now, if I'm trading a CRT now, I'm trading a 5 a.m. CRT candle on 4 hours time frame. I'm trading I'm trading a CRT candle. I'm trading a 5 a.m. CRT candle on my 4 hours time frame. Right? I'm trading a 5 a.m. CRT candle on my 4 hours time frame. So if you have any question, you can drop it on the comment section. If you want to know the CRT candle that is being traded in your location, now drop it in the comment section. So once you are able to blend your power of 3. Now, when we now talk about power of 3, which power of 3 you are using now, for you to determine your power of 3, the kind of trader that you have, we have a position traders, we have an intraday traders, we have a scalpers. So it varies. So based on this kind of profiles of trading that we have, that is how we also have the CRT, and that is how we have the bias. So you must be able to determine where you fall to. Where am I a swing trader? Am I a position trader? Am I an intraday trader? You must be able to determine all these things. So once you're able to determine all these things, you can be able to know that, okay, this is the time frame that I'm working with. Your time frame is very, very important. Because consider someone who is a swing trader now. If you're a swing trader now, you will be working mostly on your weekly time frame and monthly time frame. together with your daily time frame. So you need to wait for a good 24 hours for your setup to form. If you are making any changes, it has to be under 24 hours. You have a 24 hours time strain to what? To rethink, to rebalance your what? Your analysis. But before you can also do anything, you must wait for 24 hours too. So many of us, we don't have that patience. So that is the swing trader. So for an intraday trader now, you can make decision under 4 hours, under 2 hours, under 1 hour, under 15 minutes. If you can make a what? You can make a what? A decision. And that is why majority of all traders falls under intraday traders. We only have few people in what? In swing tradings, a position tradings. Position trading is under 1 year, 2 months, 3 months to make your decisions. For those that are for those that are on what? On sea, that they are in a remote environment that they don't have time to watch their charts. Obviously, they should go for what? For position trade. So they can be on a sea and for like 3, 4, 5 days, 3, 4, 5 weeks, there's nothing that is changing. They don't have a network, they don't have this. So the ones they just open their position, they enter and then they set their stop loss, they set their take profit, and everything is what? Everything is back intact again. Everything is back intact again. So those are the what? Those are the things you put into consideration. For CRT candle can work on any pair, any assets. I keep telling you, it can work on any pair, any assets. I keep telling you, it works perfectly. All you just need to do is what? Understand the basic of what CRT candles. And that is what I've done with this live stream. So if they are just joining, you will get the what? The review, the replay of it so you can watch it. And if you have any question, you can drop it in the comment section. So I'll be dropping the what? I'll be entertaining. I'll be giving like 5 minutes now, 2 minutes now to entertain your question on what you need to what on CRT. So while I'm attending to your question, see how far we can go. Drop it in the what? In the comment section. Let's engage. A reasonable engagement. So let's just pick a time that will be convenient for everybody, and let's see. And I'll look at the CRT that is available at that time. So we can go for London session CRT. We can go for New York CRT session. So it varies. It varies, and it all determines on which one I want to use it for. It all varies and determines the one I want to use it for. Right? So that's your CRT. Reading. I've done a lot of things with CRT. It's very, very massive. The result I've gotten is very, very massive. Massive. As in, the results are very, very massive. See, with your trading, honestly speaking, you start seeing the required result that you want, that profit that you want on CRT. You find it on CRT candles once you start implementing the CRT. So CRT is the key. If whatever strategy you are using, learn to blend it with CRT candles. One of the craziest that I've done on CRT, trading with 0.002.8 cents. That's one of the craziest is on volatility 75. As the craziest of all that I've done with CRT. So the craziest of all that I've done with CRT, right? That's the craziest of all. You can see. So that's 0.15 cents on volatility 75. That's the craziest that I've done with CRT. As in, if you want to build your account, you must understand CRT. Apply CRT trading to your strategy. So this is 0.15, and this particular trade actually gave me. Let me show you the chart of it. So this particular setup, I can show you what brought in the analysis and why I pick up that trade. So it is what? It is a trade that once you see it, honestly speaking, you can't unsee it. That's the simple fact about it. Once you see it, you can't unsee it. Ideally, you can't unsee it again. Let me show you the whole time frame, and then you pick it up from there. right? So this particular trade, I later close it at $5, right? I later close it at $5. So this is the result. So I have this now. So this is my result. So this is my what? This is my daily time frame. So on my daily time frame, you can see. So my daily time frame, you can see it now. So that is what? That is volatility 75. You can see where my entry is, and you can see where my what? My take profit is. And you can see where my take profit. So there's no truth about it. If you look at below my what? Below my entry, you can see that I already have a what? A CRT candle already. There's a CRT candle already at what? At my entry. You can see it. So I entered it late and I've set my what? My CRT. Look at the what? So that is the power of my CRT. There's nothing to worry about it. Once you understand your CRT, look at the criteria. I told you for you to take the CRT candle, your higher time frame bias must be there. You can see my higher time frame bias. Your higher time frame key level must be there. You can see my higher time frame key level already in it. You can see my higher time frame key level already, and you can know. So let's engage with it. With this particular chart, now what are you saying there? What is the word? Now let's go back to what? To that same volatility 25 and see what volatility 75 and see what it has done for us. So that is my what? That is my daily time frame. And that is where I'm picking what? I'm picking that, I'm picking. That is where I'm picking that, I'm picking, and I have my what? This is my So this is my what? This is my 15-minute time frame. You can see my entry on my 15-minute time frame, the way it goes. You can see where I pick my entry. I pick up my entry at exactly after the retracement is done. You can see the last swing high that I have, that was where I pick up my entry, and it came back to what? To a higher time frame key level. The higher time frame key level, and also in a lower time frame, I can also find a what? A key level there. The key level that I'm having on this 15-minute time frame is my what? Is my order block. Can you see that order block below that last expansion that I have at the 50 EMA, at that black moving average? Right, at that black moving, you can see that our entry was immediately at that point of what? So I've seen a confirmation on the lower time frame. So that is why I pick up that entry. So I'm not just entering based on that moving average alone. At 5-minute time frame, I've also seen a CRT candle forming at that entry. Even on 3-minute time frame, I can find I export a what? A CRT candle already. So that was the lower time confirmation that I have that gave me that full audacity to be able to trade with that balance. With that balance that I'm trading. So you can see how it's progressing. You can see my balance is not changing. I've set what I need to set, and I've what? Currently it was $3.2. You can see I've set what I need to set, and I've done what I need to do. I know that what they will eat my what? They will surely eat my take profits. They will eat my take profit. So CRT is what you need for the maximum probability that you need. And once you understand your CRT, your capital should not be a bias. This particular trade, let me show you the final output of the final result of it. Right, let me show you the final result of it. So you can see I've gotten $3.8 already on that particular trade. And overall, I left it. I know it was going to what? It was going to eat my take profit. So, and the final what? I will come back to my chart. It has already eat my what? My take profit. It has even closed already, Seth. It has even closed already. So you can see it has even closed already, right? And that was the final thing that I get, 5.15. So this is the craziest of all. That the craziest thing that I've done with CRT, honestly speaking, that's the craziest that I've done with CRT. And that's the particular $5, I still build it to something else. So if there's anything you don't understand with CRT, drop it in this comment section. Let's talk, let's engage on how you can build up your trade. How you can build. You need to increase your trading. The reason why you got into trading must increase. You need to start seeing the result why you got into trading, and you start seeing that result. You need to start seeing the result of you why you started trading. Right? So CRT is key. CRT is what is key. You need to understand CRT if you really need to understand. Right? So on to the next time. By tomorrow, London session, for those that are in Nigerian, by 3 a.m. I'll be live to trade what the 3 a.m. CR 3 a.m. tomorrow to trade the 3 a.m. CRC candle. And for those that are in Nigeria, that is going to be 8 a.m. Nigerian time. You can do the conversion. And if you want to know the current time, you can drop your current location now in the comment section and let me tell you the time that you need to meet me. I will trade it live, as in everybody knows. So drop your location. Let me tell you, tomorrow I'll be live by 3 a.m. EST, Eastern Standard Time, to trade the London session CRT. I will be what? I'll be live there at Pioneer Math and Physics. You have not missed a lot on CRT. Where do you start from? You can actually start by watching the replay of this live stream. I've highlighted the step by step, what you need to know, how you can pick up. As a beginner, you don't even know anything about CRT. That is what I did with this particular live stream. And by tomorrow, by 3 a.m. Eastern Standard Time, I am going to be to be doing a live trading, and it's going to be a live stream. I'm going to be doing a live trading, and I'm going to live stream it on my channel by 3 a.m. EST Standard Time, New York time tomorrow. And for those that are in Nigeria, where I am currently, that 3 a.m. is going to be right. So you can drop your location, and I'm going to tell you the exact time the live trading is going to start, so that so by 3 a.m. drop your location. I'm going to be telling you the time that it falls to. So tomorrow we'll meet again by 3 a.m. Eastern Standard Time for a live trading, and I'm going to show you the same thing I've highlighted on this particular live stream. So for the pool that I have, so I've got many people said they've applied the week. What was your results? Let me know your results on the comment section too. Right. So CRT is the best. If you want that profitability, forget about your balance. Forget about your balance. Just understand the concept. You can do anything with your balance. Just get the knowledge. The knowledge is what you need. The knowledge is what you need. You can see. Forget about it. 0.15 cents. Many people are actually afraid. Have been scared of trading volatility 75. Volatility 75 is very liquidity. The liquidity is very far. It's very void. No, it is not volatile. Just understand the concept. This is just understand the concept. You can see the output of it. Right? You can see the output of it. Right? You can see the output of it. Volatility 75. You can see the output. So you just need to understand the what. So when I was telling you that on that lower time frame that I pick, when I show you my 15-minute time frame, you can see there. So you can see the other block, the fair value gap at that area that I'm picking my entry. You can see the fair value gap at that area that I'm picking my entry. So that is that is the basic you need to understand for your CRT. That's the basic you need to understand for your CRT. So if you enjoyed this live stream, please drop a thumb up and like the video. Okay, for Pioneer Maths, you don't understand CRT. So if you want to understand CRT, I've done series of videos on CRT. Just go to my playlist on SMC, Smart Money Trading. So that Smart Money Trading playlist, you watch the videos there. It is strictly for CRT trading. And whatever that happens, let me know in the comment section. I will respond. And if you have my contact, you can check the description of the videos on my channel. You will get my contacts on on it, and let's see how far we can go. But CRT is very, 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 very profitable. Very, very profitable, and you need to understand your CRT. How far? Okay, so any other questions? Why we meet by 3 a.m. Eastern Standard Time tomorrow to trade live the 3 a.m. CRT candle, mostly on boom and crash on synthetic indices, and it's going to be on Forex concurrency pair. No problem. CRT candle works on any time frame. It works on any time frame. It works on any pair. You just need to understand you just need to understand the basics. What are the things that made up the CRT candle? What are the things that made up the CRT candles? Right? So as far as CRT is concerned, the CRT is the missing edge. If you have studied ICT, you study BTMM, you study smart money, you study SMC, you study process is your what? Is the CRT. Because CRT will tell you the what that's what the CRT what does for you. So you don't need to miss out on the CRT. Don't miss out on the CRT, right? CRT is the missing edge in what in your trading journey. So you need to understand the earlier the better you start implementing the CRT is, right? The better it is. So CRT is very, very profitable. Honestly speaking, it's very, very profitable. And I've done a lot of things with CRT. CRT. Just understand it. I want you to understand it. So this is one of the result of the CRT. So this is one of the result of the CRT. Right. So these are the result from my CRT trading. Right, that's $61 to what to $203 on Puma crash. So CRT is very profitable. It's very profitable. Just know what you're doing, sha. That's another one. $12 to $43. So I've done a lot of things with CRT. Just get to know your CRT. Understand it. So see you by 3 a.m. tomorrow. That's going to be 8 a.m. Nigerian time for us to trade the live